Right, good evening. It's Sunday, the 30th of January, and this is the Stage Analysis Members Weekend video. So I'm going to, there's a lot to get through today, so I'm going to go through the market indexes and breadth a bit more briefly. Anyone new to the videos that's only recently joined, then I basically post the breakdowns of the video underneath in the tweet or in the post. It basically puts the timestamps of where different sections start. So depending on what parts of the video you're interested in, you can skip forward to those areas. So if you want to look at the earnings, obviously that will be at the end of the video, and the watchlist stocks will be later in the video. And so this bit here that I've got highlighted at the moment is the percentage change since the swing low. So these are some of the strongest stocks in the market over the last week that are looking interesting. So I'm gonna cover some of this, as well as the industry groups and the normal weight of evidence approach. So right, let's get cracking. So starting off this week, we'll go back to the major indexes overview chart of the S&P 500, the Nasdaq Composite, and the Russell 2000. So we use the IWM on stock charts as they don't have the Russell 2000 chart. Not sure why, but the IWM is the ETF that covers it. So as you can see, relative strength wise, the S&P 500 still showing better relative strength versus the Nasdaq at the moment, as we got a minor break to the upside on Friday out of the recent range. I've marked it with this green box for support in terms of Monday's selling climax that we saw at the start of the week, then defined the start of the range. If you look at it on the intraday time frame, so I've got a 1 hour chart there. Quickly show that. You can see that on the intraday we had the selling climax, the automatic rally, secondary test. You had phase A area. We moved into phase B with a starting of a little bit of an up thrust action and coming back in again. So with the up thrust, we started to move into stage one, and then started to churn around in stage one, forming noticed that the bulk of the price action was actually forming in the upper half of the range here. So from the selling climax and the secondary test, you notice how high the secondary test was. So oftentimes you'll find the secondary test comes down in weaker moves and it actually might undercut the selling climax, and that gives you additional information based on how strong or how weak the actual move is initially. So this was a strong initial move with a high secondary test, and then with the bulk of the price action forming in the upper half of the range. And then on Friday it followed through quite strongly into the close there on Friday with this strong volume into the final 15 minutes. So quickly look at that on the 5 minute. You can see the force index pop into the upside there. So if we go back, refresh. So you can see, as I said, Nasdaq not quite as strong. Still had a good move on Friday, reversal day again, like we saw across the market in general on Friday, with a strong finish to the day, running through the afternoon into the close. So slightly higher over Thursday there, but it's still within this broader sort of trading range there, as is the IWM Russell 2000, which actually undercut on Friday and then reversed back up. So it had a little bit of an undercut and rally type move in the Russell 2000. But as I said, relative strength wise, S&P 500 still showing the best relative strength here, and we're kind of within these two zones. So we've got the resistance zone from the original significant reversal bars back up here, back on the, what day was that, the 5th of January, when the market turned. And then obviously after the moves back up into them and failure, that becomes obviously a more significant area, as obviously that's an area where it found resistance and failed. So that's the current resistance level that I'm looking at if we do get a move out of here to back towards the top of the range. So we've got about 7% in the S&P 500, 12% or 12% in the Nasdaq, and about 12 to 13% in the IWM there. So S&P 500's got less to do to get back up to the top of the range there as well. So again, still showing better relative strength. If you look at on the individual charts here, you see the sort of choppy range you've had on the intraday. So I noted people during the week were just talking about it being a volatile mess, but obviously what is the start of a base? It is a volatile mess. It's the early part of the basing process is the most volatile part of the basing process. The whole reason things like the volatility contraction pattern exist and work is because the initial move, the start of that part, is the volatile part, and then we actually start to contract, and as you get into the further contractions and the base develops, we get obviously the move out to the upside again, potentially. At the moment, this could still be a bear flag. It doesn't necessarily mean that we're going to get a reversal back up to the near term moving averages, but with Friday's action, that seems a possibility. The S&P 500 is doing better, back up at the 200-day moving average already, but you can see the Nasdaq is still quite far below its 200-day moving average. It was still 6 or 7% below that 200-day moving average. So in the near term, at least, would be looking for a move up towards the 21-day EMA here. If I stick the 5-day moving average on this, so it's a good short-term guide of what's going on. You can see this is the first decent close we've had above the 5-day moving average on the Nasdaq since we had that initial pop on the first move up on the initial undercut and rally off the 200-day before it failed with the secondary failure there. So that was the first attempt to hold, and then this is the second attempt to hold here. So we've had a little bit of an ABC type corrective move here, and it's starting to get back above that 5-day moving average. Again, S&P 500, similar sort of pattern, but as I said, more relative strength. We're right at the 200-day moving average compared to the Nasdaq, which is still 6 or 7% below it. So the strength is still in the S&P 500 here. See a strong move on Friday. Hasn't closed above the 200-day moving average yet. Again, if I whack the 5-day moving average on this as well, just to show a real short-term move on that. See that orange line there? So 4375. Basically, so we're above that 5-day moving average for the first time since that little pop-up up here at the top of the range there where we got that secondary failure. So starting to move into more positive territory, but by no means out of the woods yet, as it's not through this 200-day moving average, and we're just attempting to make a rebound move. It could easily roll back over into this base here, or this could just be a bear flag and we could continue on to the downside. One bright spark glow within that is the percentage of stocks above their 20-day moving average. So as you can see from previous areas, when you get into the lower zone and you stay in the lower zone for a little while, once you start to move back out of that lower zone again above this key 30% level here, then that is a short-term trigger. Doesn't always work, but most oftentimes it's a good area to start doing some testing, at least on the long side. So I've put one trade on the long side on this week on the short term in the swing trade account, but start to use some progressive exposure if we get that trigger through there. There is obviously even shorter term than that, which I'm going to show in a bit, which actually did trigger with the percentage of stocks above their 5-day moving average. So on the very, very short term, we have had a breadth trigger there, but not yet on the 20-day EMA run there. The IWM Russell 2000, as I said, weaker undercut and rally move on Friday, so still relative weakness in the small caps, still in stage 4. So you can see the big stage 3 range with the up thrust action LPSY and follow through. So this big sign of weakness. So again, this one is even further below its 200-day moving average here. We're still 14% below that, and still 11% below the 50-day and 6% below the 21-day. So looking for a reaction rally type move, rebound, to see how much strength that's got, if it can get up there. Again, this could still be just a further consolidation / bear flag, which could then break down to the downside again. Look at the weekly. It's in stage 4. We're in early stage 4. So you could get that reactive move, which often you get in early stage 4. So you get the stage 4 breakdown, move down, reactive, move back up towards the moving averages. This bar here is a significant bar, the breakdown bar there, which obviously it already failed at once there. So if you get a move back up into there, you could get up into the half of that or into the prior resistance zone in here. So you can see these previous lows in here. So into that area there. So a rebound up into this kind of zone, 209, 208 area, and then could potentially roll again to the downside if the stage 4 takes hold and we end up moving downwards. Right, that's enough for the indexes at the moment. Let's move on into the precious metals. I wanted to highlight what was going on in these still. See the VPOC here on the GLD is actually, we're just sitting above that at the moment. So the close this week was at, we got that, 167.10, and the VPOC is around 167, 166. So just sitting on the peak liquidity area there. So it's the point of control for the gold market here at the moment. So after reacting off of this trend line resistance, so still in stage one, you can see the relative strength versus the S&P 500. It got up towards the zero line, which is just starting to flatten out, but it's still holding below that. So this could need to chop around a little bit more, but for a stage two breakout, it would need to break through this near-term area here around the 175 area. Silver, again, relatively weaker, minus 7.46% on the week versus gold, minus 2.33. It always leverages what's going on in gold in general. So this, even though it's attempting to move into stage one, it's still in stage four at the moment. So we had the stage four breakdown over in this area, and then it's had the chop around. It's chopping back in and out of the range here from the prior support resistance areas, but still maintaining below this 30-week moving average, 1 week above it, and then reversing strongly back below it, and the 10-week moving average there, when closing below that again. So potential for a continuation breakdown to the downside still in this, or it could be developing this a very early stage one base structure at the moment. So it's in that chop range at the moment with that initial base that you're never quite sure which way it's going to go here yet, but at the moment it's still holding in stage four, so but potential really early stage one, but it's not there yet. There are two other areas in the precious metals to look at, which is platinum and palladium. So I've marked up the platinum chart for you as well. So this is actually attempting to move into early stage one, showing some relative strength versus gold and silver at the moment. We see the strong move since December here off of the spring low there. See that undercut and rally move there in stage four. So this one's attempting to move into stage one. We give this with that close last week above and the hold above the 30-week moving average just this week, I would class it as stage 1A. So which the A just simply means early in stage one. Again, could easily roll over. Still, if I draw a downtrend line on that there, you can see it's still in the downtrend channel here. Still got a developing channel which is chopping around. You can see the climactic action it had at the initial stage four, early move into stage four here, and then broken down. So it is attempting to base. It has moved back up into the prior stage three range there and came back down again. So it is attempting to forge out a stage one base here, but it is still in stage four at the moment, but sort of on that transition attempt. Palladium, bit stronger. You can see the last 2 weeks have been exceptionally strong, up 12.88% on the week on strong relative volume, getting back up towards its zero line here. You can see it's moving into an area of prior resistance and prior support. So this was tested multiple times during 2020. It then eventually had a brief breakout to the upside and then came back down again, which became support and then ultimately became the area where it started to break down into stage four. So it broke down into stage four in this area here. And it's been in stage four, and now it's moving back into early stage one at the moment. You can see the 30-week moving average is still declining. So even though strong move and breaking near-term highs, this is still stage one at the moment. So we'll be looking for this to develop a higher base now. Obviously, with potential resistance here, it could start to chop around in this area, and then we want to see it to start to show respect for that 30-week moving average. So ideally, we'd want to see this starting to hold in this area and relative strength starting to hold and around the zero line and chopping around that. So that's